Good morning, it's Harvey Jackson. Just going to go through some of the news items and currencies. U.S. sterling has decreased its interest rate pairing by another quarter point uh, uh, on their interest rate, and that's actually having an impact on some of the other outside markets here. Dollar edges up as sterling falls. And just basically what I just said. Sterling Bank of England rate decision is to decrease by or talking about decreasing by a quarter point. So, like Canada, we've been decreasing because our economy is kind of in a dumpster fire here, and a lot of that is just because of overspending through the past administration. So, anyway, we'll keep going on here. And this I don't know here. This Piero uh, uh, Cipollone or whatever his name is talking about the trade war between the U.S. and China could weaken the eurozone because there's going to be an influx of Chinese products going in there. Uh, I would have to question what he means by this. It might be very specific to his line of product. I don't know. Usually, cheaper products going in is not going to hurt the economy as much as he might think. And they are very protectionist economy anyway. The eurozone, they're kind of tree huggers. So I don't know how this is actually going to impact there. But anyway, there's a story that I thought I'll bring up anyway. So I pulled this article from Reuters and Karen Braun just writing about how these products have or the overall egg commodity exports have actually still been better than last year. You can see it there, and and just how it makes up. It's actually a pretty good story to read, and some values are not as high as others, but yeah, it's actually a pretty good read on the Reuters. Palm oil ends higher, and it's yeah, based on production problems in some of the key growing areas, as you can see right there in Malaysia. Russia struggling grain trader gives up foreign passport, so it's actually owned by somebody else, and they gave up their ownership so that the Russian state can own it. And I'll say this and say this again: it's always, uh, and this is a bit of a joke, it's always more efficient if government owns more stuff. I'm sure. Sarcastic. Rain brings Argentina soy crops much more needed relief. And you can see here that there was some. This is just rainfall that's actually happened in the last 7 days, and there has been some, and it was actually a little bit more than expected. So that's a good thing. We'll see if that's actually going to impact the soybean market today. Oil seeds. Let's just look at the overall market. Front month canola is up 650 and $5 into July. European rapeseed is up 4 to 4.75 dollars. Soybean oil is up 40 ticks. Palm oil up 69 ringgit. Crude oil still up a little wee bit as well, 0.38 of a barrel. Soybean up 8 and 3/4 cents, and the wheats are up 1 to 2 cents, and corn is up 2 cents as well. The Canadian dollar is down. So here's March canola, still not getting above this resistance area, trading to it and failing. And then when we look at the new crop, it actually failed the trend line because it's been going sideways for so long, and that's likely to happen. Need to kind of continue to trade higher. We need some sort of stimulus to do that, of course. Here's European rapeseed value in Canadian dollars minus the front month canola, and it's currently trading at $130, very similar to yesterday, but broke that trend line. Rapeseed up a little wee bit, but trying to get above that 38.2 retracement on the reverse, and it's failed so far. Soybean oil basically still trading sideways, but a little bit of green on the screen today, so that's helping out the canola. Palm oil is up as well. Soybeans up as well, trading at that 1065. It looks like this is kind of like a resistance area, not wanting to trade through it. So it could be something that should be looked at on how to maybe manipulate or what you should be doing with your brokerage account. So you can see here the Canadian dollar, if you exclude that one wild tariff on, tariff off kind of day, basically trading sideways. And when you drill in a little bit more, you can see that move. So this is back to the inauguration. This is the tariff on, tariff off day. And you just do some measuring on Feb retracement. We're actually at the 78.6 and looking like we're possibly going to break down, possibly. You have to hold up in there to be able to break out. that above that value. So we'll see. And that's just yesterday to today. So U.S. dollar index trading higher, and what I will emphasize, it's only a 10-minute chart, but when you look at it, backing up all the way to December, or even you go to just inauguration day, there kind of thing right there, where we've traded lower and we've traded higher. Right now, it looks like it's a trend to go higher on the U.S. dollar. That puts pressure on commodities. British pound. It actually has that downward trend that we were seeing earlier, but the Canadian dollar is actually more sideways. But here they are a bit choppy, closer to the bottom end of their range. So here's wheat, and I got a few different wheat charts here that's going to maybe show you something a little bit different. Here it's a daily chart, and there's a blue line above here, and the blue line is actually a longer term chart. And then what I've done is went to the daily nearby, so a continuous chart, and you can see that we're just about touching it there. And what I'm showing here is just trying to take as many highs as possible. Of course, I cut through here, but high, and what I'm really looking for is if we can break through, and we're right at that cusp of trying to break through this right now. If we break through there, that's a good sign. Like we have to make higher highs and break through there, and probably still have to beat this over here as well before I can say with confidence that we can be going up. But we're close here. Here's your hard red winter, and I should maybe show this in more than one place here, but hard red winter approaching that 61.8 retracement value. Milling wheat is above the 61 retracement value, but then it's failed. So it's staying in this kind of a mid-range here. Wheat, nice uptrend, but only at the 38.2, trying to get to the 50% retracement value on Chicago. Here's your corn, kind of got a lid on it right here. It looks like it doesn't want to trade above there. It's not getting to the $5 on the front month. Again, tomorrow we've got our stats scan, and then next week we've got the USDA S&D. So those are important reports, and it would be able to give us some good direction of what the market's doing.